Hey everyone, David Coe, the Coe Real Estate Group. Hey, it's been a pretty amazing week as far as real estate is concerned, and one that I think we will look back at over the next year and realize that this might have been a turning point in our real estate market. So, what am I talking about? Well, last week there was a report issued by NAR that basically predicted when mortgage rates hit 6%. It's going to free up almost 5.5 million households that will be able to purchase a home. It predicted that if it hit this year, it could be somewhere like a 3% increase in the actual number of transactions. And then if it does happen this year, then next year there could be almost a 15 to 20% increase in the number of transactions. And it kind of comes at a pretty good time. Right here at the end of July, I'm looking at some stats here. The inventory of homes for sale nationwide is up 24% year over year. There's over 1 million homes right now that are active around the country. Here in July, we're kind of getting, or in August, but at the end of July, we're getting towards the end of the travel season. So just the number of transactions have been very, very slow. Well, then something monumental happened last week. We had a poor jobs report. Now, it wasn't a terrible jobs report, but it definitely started showing some signs of weakness in the economy beyond the number of predicted jobs for July being lower than expected. There was also a huge drop. They went back and revised for both May and June the number of jobs. And because of that, the interest rates dropped almost 20 basis points in 2 days. So where we were at 6.75%, we're now at basically 6.5% on rates. And if we continue to have maybe an economy that's starting to slow down, jobs continue to, the job market continues to cool, and we do hit that 6% interest rate. Basically, that means there's going to be a ton of inventory, a lot of households that are now maybe able to afford a home that couldn't before, and we should start seeing a jump start into our housing market and kind of pull out of this 3-year slump we've been into in the housing market as far as just the number of transactions that are available. So, what does that mean to you? Well, obviously, if you're a buyer and you've been waiting on the sidelines, rates are starting to come down. Now's probably a good time to go back and look at your pre-approvals and see how much more house you can afford. While there certainly has been some slight increases in prices, that's more across the board. As inventory has started to build, we are seeing some available properties, kind of a tale of two markets. Really nice properties are still selling fast and sometimes with multiple offers. But homes that are just okay, or certainly homes that need work, are lingering. And if that's the kind of home you're looking for, you can get a great deal right now. But as rates continue to drop, there will be a huge flood of some pent-up demand that's going to hit the market. And, you're going to be back competing maybe even on average properties or even below average properties just because there's so much pent-up demand. And then if you're a seller, well, what I've been telling my clients is that towards the end of this year, early next year is going to be a really good time to list your property for sale, because if the rates do get down to that 6% level, you're likely to have a lot more demand for your home than you might have right now in today's market. So I hope that's helpful. I hope at some point I look back on this video and say, yes, I was right. This first week in August is when we turn the corner. I'm certainly willing to call my shot and put it on camera. But if you have questions about how this might affect your situation, whether you're a buyer, seller, or both, we would love to have that conversation with you. So feel free to reach out to myself or someone for the team. I would love to sit down and talk to you about it. David Coe with the Coe Real Estate Group. I hope this finds you well, and I hope to talk to you soon.